Hey guys, welcome back to another episode. Today we're going to take a quick look at Roku. The company reported earnings earlier this week, and unfortunately in the past 5 days Roku is down over 9%. So in today's episode I want to take a quick look at some of the highlights from the earnings, some of the good, some of the bad. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment where I have 10 free stocks for you, and I also have my weekly free newsletter where I share a lot of presentations of all the stocks that I cover. So make sure to check that out. So like I mentioned, Roku reported earnings November 3rd after the market closed, and we can see from its closing on November 3rd the stock is actually down about 11.17%. So we've definitely seen better days. Just on Friday when the market closed, stock was down about 3.72%. So let's jump right into the power presentation and see what are some of the highlights from earnings. First, quarter 3 revenue was $680 million, and this was up 51% year over year, and it was up 5.4% quarter over quarter. Their platform revenues, right? Roku has two major forms of revenue. Platform revenue, this makes up most of the revenue. Out of that 680, this was 582 million. This was up 82% year over year and 9.4% quarter over quarter. Unfortunately, they did see a bit of decrease in their player revenue. This is their hardware, and we're going to take a quick look at that in a bit, why that's happening. But this was 97.4 million, and it was down 26% year over year, was also down 13.6% quarter over quarter. So this is really affecting the overall company's revenue. What was guided, right? What analysts expected for this quarter? Active accounts were 56.4 million, and this is what you want to see. It was up 23% year over year, so strong, still double-digit year over year growth. Unfortunately, quarter over quarter was up only 2.3%, low single digit. Again, something is affecting this growth, and we'll see that in a bit. Streaming hours were 18 billion. That's a lot of hours of you people watching Roku right now. That was up 21% year over year, and it was up 3.4% quarter over quarter. We also saw strong growth in average revenue per user, 49% year over year and up 10% quarter over quarter. So you might be like, Jose, what's happening? Stock price showed strong revenue growth. We saw growth in the active accounts. We saw growth in streaming hours. We also saw growth in average revenue per user. Why is the stock price taking a huge hit? First thing first, they did give guidance for the upcoming revenue for the upcoming quarter, and revenue fell short of expectations, of analyst expectations, by about $40 million. That says billion, but that should be 40 million right here. Let me change it live. So by $40 million, it fell short at the top end of their guidance. So at the lower end of their guidance, it actually fell shorter by much more. Even at the midpoint, it fell more than $40 million. So I believe that's one of the major reasons the stock price is down. Another thing, maybe that active accounts only grew 2.3% quarter over quarter. Analysts might have been expecting a little bit more. But why? Why is this company seeing a slowdown in revenue? And why is active accounts not growing as much? Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. So first, supply chain is affecting player revenue. It's also affecting platform revenue and account growth. So player revenue makes perfect sense, right? Supply chain's a lot harder, a little bit more expensive to get products around, chip shortage and everything. Players are not easy to make, easy to ship, right? To ship around. So understand why player revenue is down. Platform revenue deals a lot with advertisement. And you might be like, how does supply chain affect advertisement? Well, if all these businesses are kind of out there getting ready for quarter 4, if they don't know if they have enough inventory, what's the point of advertising? Or they might slow down in advertising because they don't need it as much if things are selling out already because there's already low inventory in their stores. So that can affect platform revenue. I do want to say there's probably something in the short term of things, and that's why that doesn't worry me. Then account growth. TVs, a lot of Roku TVs might not, again, supply chain issues, account TVs might not be going out to in time, and we're going to see a crazy statistics on TV sales in a bit. But if less Roku TVs are being sold, less chances of more active members coming into, right? So all this is due to supply chain. Makes perfect sense in my opinion. Obviously, it doesn't mean I give the stock a free pass. I understand why stock price is down, but in what I'm looking right now, Roku is not really giving me anything scary in my opinion. What else do we see? Roku is also growing their original channel. Roku Originals is doing pretty strong, still seeing strong growth in forms of content that they're producing and the amount of users watching in the Roku channel. Another thing, the company is also improving tools for advertisement. One of the most recent that they announced this quarter is the ability for Shopify merchants to start to kind of do some form of campaign advertisement on Roku, which I believe can drive more people into the platform or just more advertisement money, which I think is super important. So things to note. First, TV sales. This is reported by Roku. TV sales fell below pre-COVID levels. But so that's again actively that's kind of hurting the active accounts. TV sales have now fallen below COVID levels. So again, going back to that supply chain affecting issues. One thing they do mention is that they will start to expand into a lot of Latin America countries in the upcoming quarters and in the future, in the upcoming year. So that can obviously help with active accounts. Another thing that they mention is margins on players decrease as margins on players have decreased as components increase. Right, so we're seeing chip shortage and everything, logistics, everything is kind of decreasing margins of hardware. The company says right now we are going to be eating up that kind of that value. We're not going to increase the price of our hardware right now to consumers. We want to grab as much market share as we can. So that has kind of decreased the margins. In my opinion, that was a great move, and I like how they did that. So now tier level. Roku right now is a tier 2. And at these current prices, I believe this is a mid to high dollar cost averaging. I believe a good portion of the risk has been eliminated. I really do like it at these price points. If we also take a quick look, and like I mentioned, a tier 2, if we take a look at Roku's forward price to sales ratio right now is around 9.935. 9.9, right? Roughly 9.9. It's not the cheapest it's been since January of 2020, but I believe, again, a good portion of the risk has been eliminated. Another thing that we've kind of seen in Roku, a lot of analysts have come out and might kept their original rating, but have decreased the price target. Here we see one decrease to 500 from 560, another one down to 410 from 475, another one down to 550 from 600, and another one down to 400 from 480. Remember, Roku stock price from those 4 that we looked at, even though they were decreased, they're still much higher than Roku's current price of $278. So again, but I do believe that kind of bearish sentiment has brought some more bearish flow to the overall stock price. Like I said, if you guys want this newsletter, it's free. Make sure to sign up. Also, like I said, this is a tier 2 level company in my portfolio. I do own it, and for me right now it's mid to high dollar cost averaging. So take care guys, have a good night, and see you next time.